Our top story today, the housing market's here. New data from the U.S. Census Bureau shows construction activity for residential housing tumbled to the lowest level in 4 years. Housing starts in May dropped more than 5% from the previous month, and the slump comes as high mortgage rates weigh on builder confidence. So for more on what this means for prospective home buyers, let's get to Realtor.com Chief Economist Danielle Hale. Great to see you this morning, Danielle. First, you see a print like this come through. What does that signal to you about the housing market right now and where we're trending?
Well, we know that the housing market is in an adjustment phase, especially when we look at the construction sector. Over the past couple of years, we've seen a lot of multifamily construction as single family buyers were kind of navigating higher mortgage rates. And so builders kind of pivoted towards that multifamily sector. And last year, the multifamily sector was really hot. This year, we're seeing that cool off in the multifamily sector as it catches up with that pig in the python, substantial number of multifamily homes that are in the pipeline that are coming to market this year, and rents are softening. So we're seeing a bit more of a pivot back. A lot of the decline in permit and construction activity was driven by the multifamily sector, but single family didn't fare quite as badly. That's good news for prospective home buyers who are often looking to purchase single family homes. We should see that portion of the market remain relatively steady, which should help add some much needed supply to the housing market.
If housing starts continue to fall, what will that do to prices overall?
Yeah, so one of the reasons that we've continued to see home prices increase, in fact, if we look at the median price, it's up over 30% over the past 5 years. On a price per square foot basis, according to Realtor.com, it's up over 50% over the past 5 years. So prices have increased rapidly, and buyers are really feeling that squeeze. In order to get to a point where we're seeing prices get back to a more sustainable pace of growth, we need to see more construction. So what happens in these construction numbers is vitally important. And digging below the surface and kind of looking at the single family versus multifamily breakdown, there's a little more optimism for potential home buyers and the price perspective for single family homes than there is looking at the headline number, which, as you noted, was down, was not a great number. But that single family, multifamily breakdown is also really important.
Where are we continuing to see strength among buying cohorts and then among prospective buyers as well? Where are we seeing some cracks or some outsized weakness?
Yeah, so I talked about that huge price run up that we have right now. So existing homeowners are sitting on a record amount of equity, and that creates this bifurcation. Existing homeowners who have equity have flexibility, but many of them are tied into a low mortgage rate. The typical outstanding mortgage rate for 87% of homeowners is under 6%, and the share of homeowners under 4% is close to 60%. So there's a lot of people with low mortgage rates right now. When you consider the market rate is closer to 7%, they don't have a lot of incentive to move. But buyers who don't have a mortgage rate to consider, so those who already have paid off their home and are looking to buy in cash, investors that are maybe hoping to move money around that don't have a mortgage, or second homeowners who want to get out of the second homeowning business, they can sell and take advantage of those high home prices without worrying about the mortgage on the other side. So they are really in an advantaged position right now. Sellers who don't have to buy, first-time home buyers have strong motivation to get into the housing market. With high prices and mortgage rates, that creates high costs, and it is really challenging for those buyers. We still see them wanting to get into the housing market, but they're facing some pretty tough conditions.
And just lastly, while we have you, Danielle, what type of activity would a rate cut finally elicit for the home buying market?
I think when we get to the point where the Fed starts cutting rates, we will see mortgage rates come down. That improves affordability. And I think we will see a lot of those first-time home buyers who have been waiting on the sidelines begin to get back into the housing market.
Thank you so much for joining us here. Danielle Hale, great to see you as always. Thanks so much for taking the time from Realtor.com.